That's what is going on with oil prices. They've been dropping like a stone despite OPEC's best efforts to push them back up. Just 4 months ago, the cartel struck a landmark deal with non-members like Russia to cut production. Now, back then, in November, before the deal, prices were languishing at around about $49 a barrel. Well, then that deal was reached and prices jumped to $56 a barrel. And they bounced around that range into the new year. Well, even as late as February the 27th, prices were holding around about the same, around about steady. OPEC Secretary General was then sounding pleased that producers were sticking to the cuts. Here he is.
Well, we remain optimistic that the worst is over for this cycle. The challenge now is how to solidify this platform of 24. And I must report to you that the signals we are getting from the non-OPEC side is highly positive.
But fast forward to this week, Monday, the 6th of March, $56 a barrel, but it didn't stay that way. Brent crude fell by more than 6% in just 2 days. We see it there at $50 a barrel last time we checked. And OPEC's boss now has changed his tone.
On all fronts, the atmosphere is changing gradually but steadily, positively. It may take longer than expected because we are all anxious. We have all felt the brunt, and we would like to see a restoration of stability and normalcy.
So what's gone wrong? Well, as prices rose after the November deal, US shale oil producers began ramping up production. Remember, these guys had been forced to shut down hundreds of rigs as the market tanked in 2014. And that has once again boosted US crude stockpiles, which surged this week to a new record of 528 million barrels. OK, I'm now joined by Robin Mills from Dubai. He's the Chief Executive Officer at Qamar Energy. Robin, thanks for joining us on Money Talks. I want to ask you, what do you think is the main reason for prices dropping as much as they have over the last couple of days?
Well, the initial trigger was, of course, the rise in the US crude inventories. But I think also we'd accumulated a lot of speculative length, a lot of people betting that oil prices would keep going higher, and that had come to the extent that the market was really ready to turn around on a piece of negative news and cut that speculative length. And as you say, also we're seeing the continuing strong news from US shale oil production rebounding, I think, quicker than most people had expected, and certainly quicker than the OPEC countries had expected.
Robin, where is the threshold for shale oil producers to come back into the market? What sort of price do they need to come back in, as they have?
Well, I think we're very much seeing that now. You know, if you go back to last year, just before the OPEC deal, when the prices were in the range of $45 per barrel or so, and shale oil was really struggling, but at the point that the OPEC discussions looked like they would bear fruit, and when the deal was eventually struck in November, and prices rose up to $50 or $55 per barrel, almost immediately we've seen a bounce back in shale oil.
Yeah.
In fact, the low point for US production was in September, so it's been recovering since then.
Now, OPEC's quite happy that its members have complied with the output cut, and perhaps surprisingly, because they've not always colluded well together when it comes to that sort of thing. But as the prices drop, we're seeing, is there a potential for the poorer OPEC members like Venezuela to start ramping up production despite the deal?
Well, I think compliance has been quite good so far, but it's mainly been led by Saudi Arabia, and the compliance from some of the other members has not been as good. So on average, it's good, but if you look at the individual countries, not so good. I think some countries like Venezuela, as you mentioned, are struggling to keep up production anyway. So that's less of a concern. But there are countries such as Iraq, for example, where the compliance has not been as great. So I think overall the countries will stick with the deal, but compliance will continue to be patchy, and the Saudis will be bearing a greater part of it.
Now, we have very clear figures for inventories out of the United States, and so that gives it a disproportionate impact on the oil market. But OPEC says elsewhere, the trend tends to be for declining oil stocks and to have faith that prices will go up. What do you think?
Yes, I mean, it's hard to say because some inventories, such as Chinese inventories, it's very cloudy how big they are and how much is really commercial inventories versus strategic stocks. OECD, so developed country inventories, have been falling for several months. So the US, but plus Europe and a number of other countries. And this is normally a weak time in US demand anyway. Refineries are being shut down for now for maintenance during the spring. So in that sense, it's not so surprising that US stocks have been rising. Maybe the market should have been expecting this. And as we get more into the summer period, the summer driving season, refineries start working again. And stocks go down.
Yeah. Oh, Robin, just one question for the consumers watching. They might want to know if a drop in oil prices will quickly translate to a drop in petrol prices?
Yes, it will. I mean, this is not a huge drop, of course, when you think about prices at the pump. Crude is not the only factor affecting petrol or gasoline or diesel prices. But it ought to mean, if it's sustained, it ought to mean a few percent off prices at the pump, yes.
OK, Robin Mills in Dubai, thanks very much.